Hi friends, welcome back to Stockwood channel. Gland Pharma, which was listed in the stock market in the year 2020 at a range of around 2000, gave a huge rally to up to 4200, and after that it has been continuously correcting. Currently, it is trading at its 52-week low and also lifetime low of around 1000 rupees. So most of the investors in today's stock market is worried about what would be the future of Gland Pharma and whether they have to be invested in this stock. So in this video, we'll definitely see about the reason for the fall in the share price of Gland Pharma and also what is the future of the stock. And at the end of this video, I will give you my perspective about the stock in the short term and long term. So without much delay, let's get started. Before we get into this video about Gland Pharma, let us understand some basics about Gland Pharma. So Gland Pharma is basically a pharmaceutical company established in Hyderabad 1978. Right. So the market cap of Gland Pharma is around 17,500 crores, which is almost half of that of Biocon, which is in the similar industry. The ROCE of this company is currently low of around 14.7 and ROE is around 10.8. And stock PE of Gland Pharma is 21.5, which is much lower than the industry PE. To further understand about the reason for the fall of the share price of Gland Pharma, I am into the Q4 results of Gland Pharma. Here in the financial highlights of Gland Pharma, here you can clearly see that the revenue from operations of Gland Pharma has reduced. So even on the quarterly basis, that is Q4 FY22 to Q4 FY23, it has reduced by around 29%, and on a FY22 to FY23 basis, it is reduced by 18%. The EBITDA and EBITDA margins have also reduced, that is the EBITDA margin, which was around 32%, has reduced to 21%. And also on the financial year basis, it has reduced from 34% to 28%. The same case for the PAT, which has reduced by 72% and 36%. But the R&D expenses of this company has increased by 21%. So there is a two perspective about the increase in R&D expenses of a company. Pharmaceutical companies has to spend a lot of R&D expenses to come up with innovative products in the future. So this gives a perspective that in the short term there will be increased expenses while the margins and the revenues are decreasing. But on a long-term basis, the R&D expenses is good for a pharmaceutical company since it will increase the product portfolio of this company. Further, if you see that the company has a strong balance sheet which is reflecting in its net worth. The net worth of this company has been increasing continuously over the last 3 years, and also the cash or the net cash has been increasing over the last 3 years. Another important perspective of this company is previously the ROCE of this company was around 35% and 21%, but recently because of some of the issues which I'll be highlighting in the coming section of this video has dropped to 17%. This slide of the presentation give a clear view about why there is a reduction in revenue and profitability of this company in this financial year. So one of the reasons that the company has stated is the inventory rationalization is happening for the Gland Pharma customers in US. So most of the revenue of Gland Pharma come from the US market, and due to the inflation problem, the end customers of Gland Pharma are not keeping high inventory and reducing the inventory over the last couple of quarters. As a result of this rationalization of inventory, the order books of Gland Pharma has reduced in the last 2 to 3 quarters. And also because of the volatility in the market, the input cost of the company has increased. Some of the other reasons that the company has mentioned is the last year because of COVID, there was a substantial increase in the sale of a particular product. And since the COVID has reduced, the orders have reduced for this particular drug. And also some of its production lines in Dendigal has shut down because of upgradation of the line. And also in the current quarter, if you see, one of the other plants which is in Telangana has been shut down for a similar reason for upgradation of this plant. And also one of the other reason is in the rest of the world market, there is a softer demand for the some of the drugs because of the seasonality. So these are the reasons why the stock price have been corrected over the last couple of quarters and extensively in the current quarter. To understand the future of this company, I heard the con call which was released by this company. So in the con call, the company has clearly suggested that the inventory rationalization which is happening in the US market has reached its peak, and in the next couple of quarters, the complete rationalization of the inventory would have been completed at the customer place, and new orders will flow in from its end customers. And also some of the production lines which have been shut down has also started functioning, and also the production line which was shut down in Q4 is also been restored and has started production. Another key information that the company has shared is its acquisition of a French pharmaceutical company called Synaxi. So Synaxi was founded in 2004 and is primarily in the European market. This overall transaction of acquisition of this company took place at around 114 million euros and also paid the outstanding loan of 79 million euros. Cenexi has a revenue of around 184 million euros with an EBITDA of 23 million. So once the complete acquisition of this company has started, so the revenue coming out of this entity will also start flowing into the company's balance sheet. If the information shared in the video is useful, humble request to hit the like button and subscribe to the channel. It motivates me to come with more such videos and help the YouTube algorithm. The worst has been over ever since it has corrected drastically from the levels of around 4,200 to the levels of 1,000 currently, and also the PE ratio of it is in a good range. So once the complete inventory realization has completed and also the production line is up and running, the revenues of Gland Pharma will again increase, and this would see a improvement in the revenue and profitability of this company. So on a short term, maybe in next quarter or so, there will be further correction, or there will be a consolidation of this share price in the range of around 1,000 to 1,200. And once the revenues and profitability of this company improves, the share price would start moving in the upward direction. So this was a short video about Gland Pharma. Hope you like this video and subscribe to my channel. I'll see you in the next video. Thank you.